Morning, Ashish. What would your trade be on the Nifty? At some point of time on bounces, will you be looking to short the index, or do you believe we're reaching those support levels from where we can see a bit of a bounce?
Good morning, Nigel and Mangalam. See, the overall trend that you see on the Nifty was positive until yesterday, which lasted only post the technical glitch which happened and yesterday. And today we saw a very sharp reversal with a gap down. One very interesting aspect that you can make out was there was a gap up yesterday and gap down. So this resulted into something known as an island reversal at the top, which is a sign of concern. But nevertheless, we have one line of defense, which is 14,630. If that gets taken out in faster time, by that I mean that the up move took somewhere around 7 to 8 hours. If we take out that in today's session, 14,630, then yes, there will be sign of concern and the markets might enter into sell on rise from buy on dips. So as of now, I am looking forward for buying opportunity at least over short term. So key levels to watch will be today's gap area, which can act as resistance. So I'm going to keep a close watch if we can manage to move back about that 14,950 to 15,000 mark today. If yes, then again the buying can start coming in. Else, if we start breaching that level of around 14,650 and 14,630, then that will be sign of concern. So broad range bound movement.
Ashish, for the time being, you're a buyer is what you're saying, and you're keeping your stop loss deep 100 points lower. Is that correct? You're playing for around 150 to 200 point bounce.
Correct. So what I'm suggesting is I will buy this dip as of now, but with a very strict stop loss. So I'll not be afraid to turn bearish once 630 gets taken out.
Okay.
All right, we take that point, Ashish. Individual stocks, apart from the ones that you have on your list, if you could give us a sense on the kind of chart structure that a lot of these new F&O entrants are seeing, because just the way we're watching the mid-cap screen, especially on the new F&O front, looks rather strong, because we have Navin Fluorine up 5%, IRCTC up another 4%, Alembic Pharma up 2%. And all these need to be viewed in context of the fact that the Nifty itself is down 2%, the mid-cap index is down by about 1%. So all these stocks are doing well. Individual stocks, what's on your list?
Yes, absolutely. So the new stocks that you talked about, like Navin Fluorine, it has shown a very sharp rise, and this is bucking the trend. So whatever is outperforming compared to the broader index is relatively a good stock as long as it is sustaining there at least for another couple of hours. So I'll be bullish on Navin Fluorine or Alembic Pharma, because today Pharma is anyways showing some kind of attraction on the upside. So those are the stocks which you named, out of which I will be bullish. And from my picks, the first stock on the buy side is going to be ACC. We can clearly see again this stock is trying to outperform, managing to sustain there in the green territory with all the reds. So that's a good sign. So I will buy ACC with a stop loss of 1745 for the target of 1945. And the next stock on the buy side is going to be Jagran, because again, from the mid-cap space, we are seeing a very strong rise, possibly in the form of a third wave, which is impulsive. And there was a gap about few days back, which is sustaining. So I'll be buying Jagran as of now, but I'll keep a very strict stop loss of 54.50 for the target of 60.80. Maintain strict stop loss today. Today can be the deciding day whether Nifty and the broader markets are indeed headed for lower levels, or we can start seeing again buying emerging, like buy on dips. That has happened since over past 6 to 8 months now.
Get that point, Ashish. Thanks a lot for that. In fact, you spoke about Jagran Prakashan as well as ACC. We'll ask our viewers to hold that thought, because while technically Ashish likes ACC, we'll take a short break, come back, tell you why cement stocks may fundamentally be in a better place. But as we take that break,